to Trading Lounge and the SP 500 for the 23rd of March. And starting with the S&P here, today we'll take a look at two counts, but we'll start with the first count here, where we've got this here as wave 3 here, an A wave here, a B wave up here, and we're looking at 5 waves down here for wave 4 at that point. So we're looking at this low here to, when we're looking at expanded flats and flats, we take the top of wave 3 here. So the 38.2% retracement level that we're looking for is not actually reached just yet in this. So that's something to note, and we'll keep an eye on that 2224 area there, but I mean, I need to nail that down a bit better. But so yeah, let's go in and have a look at this 5-wave structure for wave 4 as a C wave, and then I want to go back and I want to have a look at the possibility of a grand supercycle being in place here. So first of all, going to the weekly chart here. The reason that we've got this count here for is quite simple in that we've got this here as an A and a B and a C wave. This is not 5 waves up, it's 3 waves up. And yes, as an expanded flat, it has moved up higher than one would expect it to. In that case, an expanded flat takes the top of wave 3 out here, and then wave C takes the low out here for wave C here, and we're looking at 5 waves in this particular space here. So roughly we're looking down at the 2,200 and something, so we'll go in and have a look at that. So on the daily chart here, on this 5 waves down here, we're looking at it like this, which is a little bit unclear, so we're going to continue to drill into this here in terms of wave B up here, wave 1 here and 2 here, then 1 and 2 and 3 and 4 and 5 here for the 3rd wave, back for the 4th wave here, and this is all a bit messy in here, and we're just going to look at this here. Yeah, let's just drill in a little bit further here. So this is the first wave that it can be counted here in terms of wave 4 here, then wave 1 here, wave 2 here, wave 3 here, an A wave, a B wave, and a C wave here. Yes, a little bit dodgy, I know, don't throw tomatoes. That's wave 4 here and overlapping here. Yes, I know that too. And then this move here would take us down further from here. This would be wave 1 here and 2 here, then 1 and 2 here, and wave 3 here. So we need wave 4 and wave 5 to finish off here, then wave 4 and then down for wave 5. So moving down into the 2-2 area for this here. Now the other count here, did I do another count here? Yeah, this is the other count here too, that we could count down much the same, 1 and 2, 1, 2, 3, 4, 5 for the 3rd wave. But instead of looking at this as the 4th wave over here, then we just look at that as the A wave here, the B wave here, and the C wave here for this as wave 4, and then move down here. We'd move down a little bit further, because if wave 3's got the extension in it, then we'd look at wave 1 and wave 5 being roughly the same. So we're certainly moving down. The other thing here too, that sticks out here is that this level here was support, had the bounce, and then the market has migrated under this as resistance here, has had this retest and this retest, and will look to drop further from this point. So we can see it moving down further. Still, in any short-term traders from Friday will still be in a bear market to the downside. What I want to do now is I want to have a look at the bigger picture. So at the moment we're looking down here at wave 5 of C here to make wave 4. But what about if these 5 waves down is just wave 1 here? So we need to go back to, let's go to the monthly chart for a moment. So these 5 waves down through here. Well, first of all, we've got this as wave 3 here, an A wave and a B wave and a C wave for wave 4 here. But what about, for some strange reason beyond me, is that What about if the market in the fifth leg here just finished off in 3 waves here, and this 5 waves, this fifth wave here that we've been looking for here, this fifth of the fifth here, which is the grand supercycle. What about if that's actually finished at that? What about if that here is sitting over here at this particular point in time? What about if that is the top there? What can we expect at that point? Well, in that case, we might just go to the, say, quarterly chart here and get a look at this. So if that's the case, if that is a top in place here, right, then we're going to see this down here as wave 1 here in 5 waves. And because it's 5 waves, we're going to get a rally in 3 waves. There's an ABC here in 3 waves. And then we're going to see a 3rd wave down. Now, obviously, this here is going to be turned into logarithmic scale at that point, and then we'll get another 5 here, like this here. So that's pretty much the end of the world as we know it as such in that point. So, you know, this 5 waves down here that we're tracking at the moment, well, that's obviously, you know, significant, but I can't move over to this scenario here until we've got this confirmed. So this move up here will be in 3 waves here. So if that, just as a starting point, if that low here is breached after the first 5 waves up, because this is 5 waves here, that means we're going to get 3 waves here. That 3 waves is going to be 5 waves, 3 waves, and 5 waves here. A 5, 3, 5 structure. So that second low here, if that's breached, then that confirms that we've got this leg down through here. And this is a little bit like, as I mentioned in the Asian video, is that, you know, in 1929 to 32, we had all the same things happening as well. I mean, back in the, you know, 1910 and all that trip up there to 1929, you know, today we've got the internet and, you know, we've got all this consumer products and so forth and so on, and, you know, property's way overvalued and so on and so on. Well, that was the same back then as well. You know, they had the radios and the cars were coming in, and, you know, it was a big time then in terms of consumer goods. And, you know, that's when the public started to trade shares. They were selling the stock exchange was selling shares, you know, to retail people. You know, so they were all piling in and all the same sort of thing. And it was basically it was a property problem, you know. And when they had the first 5 waves down in 29, then the government said to the banks, well, this is your problem. You need to support this situation here on, you know, this move down, which the banks did. So they pumped money into the system, what they had, but it wasn't enough, and then it just collapsed at that point. So this time around, it's not the banks putting in money this time around in this part of the cycle. It's sovereign money that's going in there, you know. And sure, yes, they can print more money, and, you know, that's one of the things that a lot of economists don't understand as well, is that, you know, there's always money being printed and put into the economy. That's the way it expands. You know, where do you think all this money comes from all the time? There's more and more and more and more of it, isn't it? So it does get put into the system. You know, that's how the system works. So, but, you know, governments have, you know, I know in Australia here we've got $182 billion, and half of that money has gone into the economy by the RBA buying up you know, government bonds. So it's the same. So, but anyway, my main point here is that I've always understood this situation here, you know, and all this way up here, I know that we were looking for a top and then we're going to have a turn and all the rest of it. It's the fact that that's just finished up here in 3 waves here, that's the thing that sort of gets me stuck a little bit. And I know that people are confident out there and can say, no, Pete, that's just finished off in 3 waves and this is what we're going to get, you know, and they say that with confidence. And I've been in confidence before, and it just doesn't work in the markets. The market is the boss and we need to do what we're told. And this situation, the only way we can resolve this in a practical way is allow the first 5 waves to finish. And once they are finished, and yes, I can make mistakes in this first 5 waves, you know, that's nothing. But generally, you know, I pick up the thread up and we get back on the horse and we go along again. And so this, you know, we have to wait for this to play out here. And we'll be very mindful of this. But once we do work out that it's corrective in this point, if it is corrective as a corrective structure, and we may be able to pick it up in other markets first and in stocks and all sorts of things. But if we do recognize this is corrective here, well, then this is the time to get rid of those extra properties you got and all those sorts of things, you know. You don't want to get caught in this situation, because this will just, even once this 5 waves here finishes, the market will move quite quickly to this point here, right? And it causes this will cause a lot of damage, but that's not the real damage. The real damage is when this 5 waves here finishes, then we'll get another 3 waves up here, and then we'll get another 5 waves down here. Now this will be the C wave here. So this is the place where wars start, normally in around the wave 4 of wave C here. So this is the one to watch here. And not only that, is that, you know, the market moves quite quickly to all this point, but all of this through here, all this time factor here is long. You know, this is the one that grinds the commodity, the economy out. It's the one that this is the hard yards here. This is all fun and games here. This is hard yards. So, like I said, there's a lot to be considered here, but all I can say from my point of view in terms of patterns is that we just need to stay with the evidence and we need to work this one here. So that's what we'll do. All right, I'm sorry to harp on so much about all of this, but I can see that, you know, questions are coming in now, and we need to, you know, have a bit of a game plan, and my plan is this situation, this little guy in here. So that means that on the daily chart coming back in here, that means that currently we're looking for wave C over 4, and it's kind of hard to think that, well, how can this end here, you know, because the virus is only just begun, you know. So, you know, they will pump, once this finishes here, they will pump money into the system and whatever it takes, and, you know, they'll support it up there for a while. So we'll see, you know, and this one here will have 5 waves in it through here. And this is the one that we'll be watching, because as a bull market going up and a corrective market, they'll be the same to this point here. And it's only after that we can kind of work it out a little bit. Well, there is a way to work it out before we get here, and the only way is that the A wave is normally sharp and the B wave is what it is. Well, that's also interesting as well, because as a wave 2, that would pull back rather sharp as 5-3-5. So if it doesn't pull back, if it doesn't pull back as a 5-3-5 structure, simple and sharp, back to the 61.8%, well, B wave will pull back to the 61.8% too. But if this B wave here, if it is a B wave and it drags out in some sort of more complicated structure than a 3-5-3, then we'll know that it's corrective. We'll also know it's corrective too, because the A wave is sharp, the B wave will be what it is, and if it's in very simple 5-3-5 structure, as the same as a wave 2, then we won't be able to recognize it. But we may be able to recognize it if the wave C has more of an angle like that here. I mean, I've dramatized it, but if that's on more of an angle, then we'll know that it's likely to be wave C, and we'll have 5 waves struggling in this sense coming up here, you know. Then we'll know at that point it's going to drop off. But as a wave 1 here and 2 here, this here as a wave 3 here should be, you know, should be more powerful than wave 1 here. There'll be more form in it, so it's a bit hard to work out, but it should be strong. But this is where our answers lie, in this structure here, not in the guessing game that's going to be the end of the world after, you know, and so on and so on. We need to work step by step. With Elliott Wave, there's so many times people get it wrong, and you know, you don't want to get all emotional and dragged into that scenario. So we'll just go step by step, but the answer lays in this structure here, okay, and that's what we'll be working through there. We may see signals elsewhere and so on. All right, well, that's it. Okay, thanks for tuning in. Cheers.
Report unless it's done.
Really?
They're sorting out some plates.